Hello, everyone. How's everyone doing today in FACE? I'd like to welcome our viewers at investing.com. Welcome to the trading family. So I want to start off with WTI. Those that are regulars, so hi, Forex Gal, how are you? No, I've been negative the market, looking for a break, I think at least to 52-ish. I actually think we could take out the 50 handle to set up a great buying opportunity that'll take the market back to maybe 68. That's a little bit of my Dale Pinkert act here. But I want to talk about something. I was talking to Robert Dunn yesterday and talking about stop hunts, and he's an ex-Floor guy, so it used to be on paper and now it's just orders. But when I look at the crude right now, this is how I look at markets sometimes. I go, where are the stops? They're at times magnets. I've read a lot of people talking about orders are, the market will go to where the liquidity is. And part of that liquidity, an important part, are stop losses. So as I look at the crude right now, I'd say that short-term scalpers probably have stops over this high. Swing traders have buy stops, the bears, over this high. And position traders have stopped over this high. So, in fact, they shook out most of the bears on Friday. This was Friday, very ugly day. This was a classic stop hunt. Everyone had, after this break, had their stops over the high. They're gone, and the market ended up going in their direction after they were shaken out of their position, and now most likely without them. So, people say, Dale, how do you know where the stops are? Well, you know what? All you have to do is imagine that you're either long or short, and then say, you're long right now. Where would your stops be? Well, I'm a betting man, so I'd say there's some stops here under Friday's low, and there's probably a ton of stops for bulls right here because that'll be taking out the 55 level. So my bet right now is that these stops, these two, are elected before these two. So I'm not saying we can't rally back to 56.30 or so, but the way it looks to me is crude had a very big build. The API, I believe it was the API, came in with a big build. And you know that both the oil market and stock indexes kind of have a similar look, although crude has a little weaker look, but keep this in your mind. And now here are the S&Ps, pretty similar, right? All right, so the S&Ps, same scenario. There's probably some people shorting the market with buy stops here, and definitely buy stops over this big gap that we had Sunday night, Monday, and ton of stops here, and I could go longer term. And here's one thing before the plunge protection team came in, and I'm kidding, I don't know if they exist or not. A lot of people are coming to believe it, but you notice the RSI on this break was a lot of momentum to the downside. So you can bounce from these kind of oversold levels, but confirmed lows normally are an implication that the market's going to revisit that area. So I'm thinking we're going to revisit this area. We'll see. I'm wrong plenty, but just want to, besides, when you're trying to become a trader, you don't only want ideas and execute them, you want to know the whys behind it. And you know what? We do that here at ForexAnalytix because, you go to the dashboard and you have all the explanations of what technical levels are important. I really like Amanda's a great trader. And so you have all the explanations, the technical reasons. You have it in different forms of methodology right here. Elliott, harmonics, basic tech. I don't think there are maybe even any other services that offer. Normally it's, you go to a site, well, like Grega. Grega's site is Elliott Wave, right? That's it. There's no harmonics. There's no basic technical. There's candlestick, and we're very fortunate to have great people that are well known and have talent to represent. It's not just a method. It's, you know, it's the practitioner of the method that counts. You could say you're an Elliott Wave practitioner and, you know, have your alternate counts hitting all the time instead of your preferred count. So I recommend there's a link here in the room for you at least to give us a try with a trial. You know, if you're watching this, you know, risking $1, you risk, you know, 1,000 times that every time you click the mouse for a position if you're, you know, one lot trader in FX. So well worth it. And I really suggest you go ahead and take a minimum 3-month subscription and immerse yourself in the community after FACE and during FACE. There are a lot of people in our chat room that this is not a hobby for. Blake, who's a great trader in his own right, has said that some of his best ideas, I'm quoting him, come from the community. So I'm a big believer in intelligence gathering and the sharing of ideas and a supportive community because it's a tough game. And, you know, you don't have to isolate, you could collaborate. So be a collaborator, not in the way they talk about it in the espionage game, but in the trading business, and become part of our family here, our community. I also think, you know, a very important issue is some people really aren't satisfied with their broker. And okay, I'm talking like me. I'm not big on change, you know. You kind of get used to a pair of old shoes or slippers. You don't want to throw them out. But you know what? If the spreads aren't competitive and you're not getting rebates and your fills are off and you think this company's trading against you, then you need to talk to our partners, our sponsors, and either be reimbursed if you're overseas for your subscription. And if you're overseas, you could also take a rebate check. You know, you don't have to subscribe if you're listening to me, but you should really consider having more than one broker, right? More than one broker. In racehorse, in that business, in racing, horse racing, you could have a, you know, a horse that's running great speeds, but you know what? You really don't know what kind of horse you have until you race it against another. So no law against having more than one broker, and Trent and Justin are brokers of brokers. So they have a wide selection to find the right fit for you. See this? All of these brokers, all the majors, all the regulated by important regulators, because the philosophy is not just the return on capital, the return of capital. And now for the fun part. All right, Greg Horvat has landed in the Big Apple. I haven't seen any news flashes about him, you know, what he did last night. But Steve is leaving too. And you could tell how supportive my team is. They're jamming me. They're jamming me on Skype and trying to break my flow. Anyway, if you're in New York, you know, why not go meet these guys? You know, it's not every year that, you know, Steve's going to be flying over here from Greece and Grega from Slovakia, and Joe's going to be there. So, you know, we have a big part of the crew participating in this. And then there's going to be a social aspect to it too. You can sign up for free, and it's coming up this weekend. So you can register now. You know, we will be, I believe, live streaming their presentation, or else it'll be on YouTube. Not sure about the hours yet, but very proud of the team that's going to be there, because all of them, you guys know what I think of Greg. I call him the Wizard of Waves, and Joe really doing an excellent job. He's broken through. He's on all this very important media, like Raoul Paul's media. He's on Bloomberg. The guy is really a go-getter. So you can meet Joe there, and everyone knows how I'm always thanking Steve for his rundown of the markets every day, because I think he does the best review of anyone on the net. He puts a whole jigsaw puzzle together for us every day in about 20 minutes or so. And that's not easy to do. So the pros will be there. Go meet the guys.
Coach?
Yeah. Yes. Hi.
Good morning.
Good morning, buddy.
Our presentation, since you mentioned it, our workshop is indeed going to be streamed live, as you mentioned, and it's going to be at 3:30 Eastern time on Monday, on the upcoming Monday, the 11th, if I'm not mistaken.
All right. So where can we watch it?
We're going to distribute the link some days ahead. We're going to start tweeting about it. So I'll also give you the link so you can share it with people here. Friday, Monday in the face webinar, so people will know where to find us.
Yeah, and like always, like someone asked me today, I get these questions a lot, Steve. People that can't make it for our guests live, they always ask, is there a recording? And yes, there's always recordings. Because we're trying to serve you, and we know, a lot of you have other responsibilities, and can't be around at a certain hour. And in fact, that's another great advantage of being with ForexAnalytix is, you could take us anywhere. You could take us on vacation, right? You just load our mobile app and you'll get all the push alerts. You get all the research. So, that's a real big advantage. So we're trying to make what normally would take all of your attention every day, every minute, every hour, and take that pressure off of you, because you only have 2 eyes. So you count up the team, there's another 10, experienced eyes, sharing what we see all day long, 24/6. So I've been around. It's the best team I've ever been part of. So with that being said, Blake, how are you this morning?
Good, and welcome everyone. Just FYI, we have ADP numbers coming out very shortly. This, as you guys know, the ADP private sector numbers, the jobs numbers kind of have stole the thunder from NFP somewhat over the course of the last couple of years, but as you can see, we're going to be watching the U.S. dollar Japanese yen. So this is Bloomberg. Most of you guys know the Bloomberg system. We're going to see the numbers first here. We're looking for 190,000 jobs to be created. Prior number was 213,000 jobs. And so we're going to just tackle that really quick. But before we have like a minute, from what I understand, Steve is making his debut on Bloomberg TV while he's there in New York. Is this true, Steve?
No, it's not settled yet. We've already settled I'm going to be on Real Vision.
Well, do it without food in your mouth.
Yeah, but I didn't expect you to actually.
Whatever you do, don't have a sandwich in your mouth when you're speaking on
guilty. You see, Blake. I mean, I even have to eat in front of the computer, and instead of giving me a bravo. Yeah.
I can't tell you I can't tell you the last lunch I have not eaten in front of my computer.
Indeed.
So I get it.
I can't remember.
You have time, and maybe you could do it while you're on the plane, to practice a Joe Perry stance before you get on Bloomberg.
That's not replicatable, Coach.
No, you have to try it, man.
15 seconds. Stand by.
Let's see the ADPs.
All right.
Look right where my cursor's at. 183, it's a miss. No real reaction with the dollar yen yet.
You shorted the yen yesterday, Blake, didn't you, up there?
I mean, there's no reaction there. Yeah, and damn it, I just lost my Bloomberg. Oh, there it is. See any revisions? Nothing is moving. Well, maybe we'll see a revision here. I shorted the dollar yen yesterday. Yes, I did.
Yeah, nice.
Yeah, I mean, I was in and out. It wasn't obviously a long-term.
What do you think of here? Corrective territory, maybe back to 111?
I'm thinking this market's.
I know what you're going to say.
It's the worst. It's like I wake up every morning and go, my God. You know what I did do is I shorted some Aussie yen. Okay, and so the dollar yen it's getting a little lift. 300,000 the revision came in better than expected. So revised up last month from 213 to 300,000. That's what's given us the lift there. So, you know, one of the things, and I mentioned this, and I'll mention it again. This is not. Let me go over to the blog. This is a blog that we have on our site. If you're not a ForexAnalytix subscriber, you can at least you know, hit this up. This is our chart of the day yesterday, and you can read, you know, the verbiage that I wrote. The gist of it is, you know, however, a miss could challenge the lower end of the channel, keeping in mind that all the talk of a possible resolution in the U.S.-China trade talks have failed to spur upside in the pair. We think the risk remains lower. So the Aussie yen, you know, was trading, you know, right here, and I captured a quick short. It was just a quick, you know, 20 pip gain as I shorted it through this trend line. But, you know, I could have made a lot more, and I was kind of scalping in and out, and I was in the middle of about ready to pick up my son from soccer practice. So I didn't be able to stick around. I wasn't able to stick around for more of this, but you know, the Aussie yen it's clearly in a range. I think Steve has got a short on it currently. And one of the things that I should mention about the Aussie yen is, like I said in the blog, everybody's got the idea that the U.S. and China trade resolution is going to happen, and why hasn't that spurred further upside in the Aussie yen? Why isn't the Aussie yen well above 80, closer to the 200-day moving average? I'm unsure of that, and the fact of the matter is we're not. So that in itself is a risk to the Aussie. I think there's a lot of downside risks with Aussie moving forward. One of the biggest ones, in my opinion, and I know I've said this a lot on this webinar, almost on a daily basis, is when the U.S.-China trade deal gets done. I'm saying when because my assumption is it's going to get done. The fact is that the U.S. is going to steal. I say steal is going to take monies, or not take monies. The trade deal is going to be more beneficial for the U.S. more than likely, and then China is going to have to concede and start buying more U.S. goods. That's less Australian goods. China's economy is already slowing. It should continue to put the brakes on Chinese growth, which in turn is going to hurt Australia. So if there's one country that, in my opinion, is going to get hurt more than most, is going to be Australia, and New Zealand. You could throw that pair into the mix, that currency into the mix as well. So I do believe that the Aussie is going to be a currency that is going to revisit this spike low downside at some point. Doesn't mean we're going there right now, but I think you want to be short the Aussie overall, and as you can see, the Aussie dollar itself is approaching the 70-cent level. We cracked below pretty key support, so any rally back to 70.50 is going to be a selling opportunity, in my opinion, in the Aussie dollar now. As far as the rest of the FX market, we are really slow. I mean, it is an extremely slow day, and it's been an extremely slow couple of weeks. One of the things that I that we should talk about is the dollar Canadian, because we do have the Bank of Canada meeting today. Now, the dollar Canadian has ripped higher. We've got a big inverted head and shoulder pattern. If you guys are ForexAnalytix subscribers, you can go to the active patterns in play, and I've got a dollar Canadian bullish pattern in play once we cracked the resistance. Now the resistance was right here. This was the once we broke 132, we knew that the inverted head and shoulder pattern was setting up. The risk was manageable from here, and now the pair looks like it's going to 136. Interest rate differentials also point to a move above 135 currently. Does that mean that the dollar Canadian is going there today? Probably not, but I'm going to take any dip in the dollar Canadian to be long. So if we get any type of dip back towards 133 or maybe 133.20, I'm going to be on the long side of the dollar Canadian. I'm looking. I've been playing this obviously to the long side, and that should allow me to explain a couple other things. When you have a pattern in play by one of our analysts, whether it's Grega, myself, Steve, Stelios, whoever's putting them up here, you have to realize that these are patterns that are more or less by the book. And we obviously put in charts on the reasonings why we're, buying or selling something, but that doesn't mean that we're going to be long or short the whole time. I've been short the euro pound a lot over the course of the last few days, and I've been working a core position short in the euro pound because I believe that we have a bear. Well, we've had a couple patterns break, but we really cracked this key support below 86 pence, and now that we're below it and can continue to close below it, I continue to target to the short side. But we have a bear flag pattern now developing, and so on these rallies, I've been selling more. On the dips, I've been buying some up, covering some of my shorts, keeping a core position, looking for ultimately a move a lot lower. So, and same with the dollar Canadian. I've been on the long side. I currently don't have a long because I know that that it is Bank of Canada coming up, and I thought the rally above 133 was a little overdone, so I sold mine obviously early, and we continue higher. But I am continuing to buy dips here. So. Just because we have a pattern in play doesn't mean that we're physically long or short. It means that that's what the pattern is suggesting, that there is continued upside. But this or downside, this helps you identify, okay, well, if the euro pound is a bearish pattern, it's a bearish pattern, then ultimately the target's down at 84.75. So maybe I should have a bearish bias near term until we reach that level based on that chart pattern. So those are the types of things that that I want to convey when using ForexAnalytix as a tool, because this isn't a trade copier service. We don't tell you, buy this, sell that, but what we do is we try to give you indications of what certain developments would tell us what to do based on our interpretation of quote unquote by the book setup. So that's what those are. Now let me quickly just go over a couple other things before Steve gets here or comes back. He's hopefully done eating his sandwich. So the Kiwi is currently in a big triangle pattern. Looks like we're going to trade down towards the 67 cent level. I would assume with the Aussie as heavy as it is, that the Kiwi is going to eventually follow suit. The US dollar Mexican peso, it's sideways. I've been trading in and out of this pair. It's a very expensive pair to hang on for too long, but I have been trading in and out of long positions. It's been more frustrating than anything, but I do believe that the US dollar Mexican peso is primed for upside, especially if we see some volatility make its way into the market. I've got my fingers crossed regarding that. The dollar Swiss, pretty choppy here. We're holding basically the 38% retracement. I think an upside break is eventually coming, but I'm more worried that the daily sentiment index in the dollar Swiss is getting somewhat extreme. So the risk of further downside in the Swiss franc, that means dollar Swiss higher, it's starting to get a little stretched. So I'm being a little cautious there. The US dollar Norwegian krona trying to break out to the upside. This has been a pretty strong move, but we're challenging resistance, and you got to be a little nervous here if you're short dollars. If you're short dollars and you see currencies like the dollar Swiss, the US dollar Norwegian krona, the US dollar Swedish krona continuing to be pretty bullish here. That would make me a little nervous. And yes, to answer Dale's question, I did short the dollar yen yesterday. I think closer to 112. I think my average was like 111.97 or something like that. I closed it out. I didn't stick around long, and you can see the dollar yen is actually in a pretty tight trading range. One of the things that I'll point out about the dollar yen really quick before I let you guys go is that as long as there's no volatility, as long as volatility is low, which it is, obviously we're at decade low volatility in the FX market, which is extremely maddening, as most of you know, that trade currencies. The carry trade is kind of in vogue right now. That means that you're buying higher yielding currencies, selling lower yielding ones. That the dollar yen is a perfect candidate for a positive carry. And unless volatility picks up, that means unless we see stocks really come off of these levels, then the dollar yen is probably going to stay relatively elevated. However, and that's keeping the dollar Swiss, elevated as well. However, if stocks start to see some downside, which, we're obviously challenging a lot of resistance, just because we're at resistance doesn't mean we're going to roll over. I think we are at this 28.20, but it doesn't mean that we're going to. Until stocks start to see some downside here, below, let's call it 27.60, then those yen pairs will probably stay relatively elevated, and same with the Swiss. All right, but we start breaking through 27.60, 27.50, you probably see a bid come in to the yen and maybe the Swiss franc as well. All right, now with that being said, I'm going to pass it over to my colleagues. But as Dale mentioned to you guys, if you're searching for a broker, you haven't found a broker, you really have questions about the broker that you're using, you don't feel that they're valid. I was having a personal discussion with one of our clients about some problems that she is having with her broker. I'm like, you got to talk to Forest Park FX. These guys are there to help you find a broker that will fit your strategy, your style, and also you could end up paying for ForexAnalytix and get it for free because you could join the reimbursement program. And so if you haven't talked to them, there's a Skype and email address. They answer fairly quickly, especially if it's on via an email. But talk to them and just see what they have to say. It doesn't hurt to ask. It never hurts to ask. So and see what they can do for you based on where you're at and the type of trader you are. So they are our sponsors for the Face webinar. So visit them. It helps us deliver this webinar to you guys every single day. So with that being said, I'm going to pass it over to Steve, and Grega is in New York. He arrived yesterday.
Oh yeah, he did.
Yeah. So we got Grega there. When do you leave, Steve? Friday?
Friday. Yeah, Friday afternoon my time. Yes.
Great. That's awesome. Well, I'm sure everybody in New York is excited to meet you and Grega and see Joe, and that's going to be pretty exciting. You got Bloomberg Joe, you got Steve, who might be Bloomberg Steve, then we have Grega. It's going to be great. So
the Wizard of Waves.
The Wizard of Waves will be there. So exciting stuff, guys. Well, I want to wish you a wonderful hump day or Wednesday, and I'll see you guys tomorrow morning.
Good luck. See you tomorrow, Blake.
Thanks, guys. Trade balance numbers just came out.
Yes, we just got some Canadian data. Trade balance worse than expected. trade balance out of the US also worse than expected. So
nice. So almost 60 billion.
Yeah.
Negative.
Yeah.
In a month. Not bad.
And we have a Canadian interest rate decision in 1.5 hours. Before you start, Steve,
the trade war is really helping.
Ooh, yeah.
Yeah. Well,
absolutely.
I mean, billions are pouring into our country, I heard. So why are they flowing in or out? Maybe that's why we're getting a wall to keep the money in.
As I've said, some months ago, it's obvious. I mean, if you judge how the trade war is doing by the numbers, strictly mathematically speaking, it's not looking good. It's not looking good at all, because the US has been running last year record trade deficits, historical record trade deficits, despite the trade war. It doesn't come as a surprise to me. I never expected this kind of policies to actually work, and I think that
you're bearish my country's economy, Mr. Volge.
Trump is not stupid, and I'm sure
I resemble that.
Yeah, Trump is also saying that. So I'm pretty sure I agree 100% with Blake. I'm pretty sure that we are going to have a trade deal, and as it happened with the US MCA, whatever they call NAFTA now.
YMCA.
Yeah, whatever it is. I'm pretty sure that it's going to be declared like the best deals of all deals. But it's going to lack substance. That's what I think is going to happen and that's why I think that the trade deal is a great opportunity to sell the news. So, Stelio, what else did we have besides the numbers that just hit?
Yes, we had two things: Australian GDP, which was expected to go up from 0.3 to 0.5% quarter on quarter. It actually came in at 0.2%, so that was quite a big miss, and that was I think the main reason why the Aussie has been suffering this morning. Indeed. And we had a couple of comments from the ongoing saga for the Brexit circus. So we had the spokesman from the EU Commission saying that the talks continue. They take place in a constructive atmosphere, but they've been difficult. Discussions have been difficult, and no solution has been identified at this point. So this is not really very positive. Well, not positive at all. And also the DUPs, remember the DUPs in government with the Conservative Party in the UK, Sammy Wilson from the DUP said that, and I quote, "No deal would be better than this deal." So they're not really on Prime Minister May's side on the deal, that's for sure.
Yeah.
And we have to remind everybody that next week is the big vote. So we have the meaningful vote on May's New Deal, whatever that is, on the 12th. And then we have two more, if that fails, or when that fails, we have two more votes. Firstly, for Parliament to approve a no-deal Brexit. And then if that fails as well, then there's a vote to extend Article 50. So that's...
I'm pretty sure, Stelio, that we're going to get to that.
Yeah, well, you've been saying it all along, and at the moment, it doesn't look like we're getting anywhere. So it is a good probability of it happening.
Yeah,
and
I think we will have to be bored for a long more time with all this saga. I think it's not going away anytime soon. I hope at least we can get rid of the China-US trade deal saga quite soon, so we can move on, to the next subject.
Yeah,
actually, European sanctions.
Yeah,
the never-ending story, Steve.
Yeah.
Actually, one other thing I wanted to mention, we talked about Australia just a second ago. One number that really caught my eye was that new car sales in February in Australia were down almost 10% year on year. And car sales is usually quite a good leading indicator.
Yeah, absolutely.
So that's
a leading indicator.
Yeah, it looks like a pretty catastrophic number. I mean, it's huge. But I don't know. Personally, I don't know if anything has changed in legislation or something that has caused that. If yes, then this number becomes less relevant. But it's always a big indicator. New car sales.
Indeed, and 10% is not something to dismiss, right? It's a big number. As you said, though, we have to check if there was some other factor affecting such a bad print. But if there isn't, definitely not looking good. Okay.
Yeah. I heard the reason. I know I'm not a fundamentalist, right, Stel, but I heard the reason for that auto sales drop is that a lot of Aussies are getting into kangaroo pouches and having a kangaroo transport them around town. Very good gas mileage. Huh?
At the very least, it sounds 100% ecological, right?
Very green transportation.
Yeah, extremely green.
All right. That's the end of my comedy activity. So, and now, guys, I want everyone to pay attention and watch how Steve Logie will put together the whole jigsaw puzzle in 25 minutes. So you could come in here with a clean slate every day and go, God, I don't know what to do. And I'll bet you something. After you hear Steve, you're going to have a few ideas and areas to be considering. And Steve doesn't stop here. He's in members chat all the time, sharing ideas that happen after face out.
Not during the past couple of weeks, I have to admit, because
okay,
it's been extremely hectic, getting everything ready. But yeah, once I'm back, I'm definitely.
But when you see something important that you're doing, you always jump in there and share it.
Yeah, as I said, no, the last 2 weeks have been hectic, but in general, yeah, it's a very nice place to be. I mean, the community we have in chatroom, and you can have from discussions outside the markets because people are really good and friendly to discuss in detail everything from a macro perspective to down to the technicals. And very, very capable traders in there, and really, really love to exchange opinions with them. Looking forward to coming back and getting a more normal routine so I can do that again on a daily basis. As Stelios mentioned before, Coach, overnight actually the only real mover has been the Aussie and of course all the Aussie pairs. Why I consider it important, if we start by looking at the Aussie against the USD, first of all, I was monitoring at this symmetrical triangle, and with the move that we got overnight, it's quite clear that we're breaking down from there. We're currently testing a horizontal support area. If that gives as well, I think this opens the door for quite a lot more downside, and this makes me feel good for holding on to my Aussie yen position, because if I move this a little bit, you can see it more clearly. The reasons I was short were that, first of all, we had broken down from this symmetrical triangle, and despite the several attempts to break back above this trend line, we failed in every single occasion. And the price action was also quite corrective. The RSI profile was also showing that since we were unable to penetrate through the 60 area, that this was likely a correction. So I do think that it looks good for more downside, since we seem to be getting unstuck once again from this let's call it a ceiling that we had on that trend line. So I'm still holding my short position, but I now more or less demand to see some continuation. I'm not going to like it if, given now the excuse of the data, we don't manage to produce some follow through. So I will even consider taking little profits, or go out at break even, or take a minimum loss if I don't see this actually producing some follow through. But so far it looks good, and I believe that this week we might have quite a nice continuation to the downside. My first target is this area down there at 77.60, and if we make it below there, I do think that we're going to make it to retesting this 76 horizontal area. Now, at the same time, this move also created some downside pressure in the Aussie Kiwi. I remind you that I've said plenty of times that this horizontal support area and the 61.8 have acted as support, but the fact that we haven't been able to rebound strongly from there tells me that we should sooner rather than later probably break lower. It looks like it might happen any moment now, in which case I will be looking for a retest of this spike lows at 102. So Aussie Kiwi might also be about to start its next leg lower. At the same time, that put a decent bid on Euro Aussie, which I have to admit that, despite that, hasn't been doing much, because if you zoom out, you can see that the price action has been mostly choppy. And, for example, we were trading at the exact same levels, a year ago. And, we've been lower, we've been higher, we've been lower, we've been higher, but we're again where we were exactly a year ago. And, that shows you how choppy the price action has been, but how much unable the pair has been to actually, get an actual trend. So I think that, if you're trading it, you should definitely have shorter term horizons. Anyhow, the good thing about those pairs, Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, Euro CAD, Pound CAD, is that, they have the ability of, sometimes when they get unstuck, of moving, several hundred pips, sometimes even, over a day or a couple of days. So, you might not get like a clear cut trend. We might not have one recently, but that doesn't prevent them from producing some nice shorter moves. Okay. Now, speaking of Euro Kiwi making another attempt to break above this descending channel. So I do think that, Euro Kiwi should, tell us rather soon what his intentions are. So, we get rejected from there. I expect to see continuation lower, but we finally break above that. We should see some follow through, which, should bring us back to retest this 171.30 confluence of resistances. So I think that Euro Kiwi, should be monitored closely. From a technical perspective, it should be doing something worth mentioning rather soon. Now, we haven't had a look at it recently, but last time we did, I said that I favor a jump higher in EuroCAD, because these move lower, that, then we had a decrease of volatility as we were hugging these broken triangles trend line resistance. This time, of course, testing it as support. And as you see, the RSI at the same time never actually made it to oversold levels. So that was a decent sign that we might have had a rebound from there. And so we did. Keep a close eye on this exact zone that we're testing, because we're now testing the confluence of the 50 and the 200 daily moving average. I'm not sure it's going to be enough to reject price action. It looks to me like we can easily head higher from here. So I would still bet that there is more upside. 153 looks like a good resistance zone, and I think that there is a decent likelihood that we're going to make it there. But in the short term, watch out for this zone. By the way, let me go through the
Steve, I was going to ask you, did you add to your position in Ethereum the last couple of days, or it didn't get deep enough for you?
No. I was, and I'll tell you why. I have no problem jumping in that temporarily. I'll tell you why. Because let's go to the 4-hour chart, because since it was a short-term price action, you can more clearly see it here. Yeah. The reason I didn't do so is because I was expecting a little bit of a deeper, of a deeper pullback. So I still have half of my position. I made a little bit more than 10% of, the first half of my position, and I'm holding the other half.
Everyone look back at that blue triangle back at the beginning of February. That's where Steve was buying it.
Yeah, this was a beautiful wedge there. I mean, the price action was very nice if you see it on the daily as well. And I do think that the price action lower looks corrective so far. So I do think there is more upside to be made here. But you know me, I'd rather...
It could still get there, Steve. It could happen.
Yeah, it can. It can.
I think two drives. Maybe one more.
It can, although I have to say that, theoretically speaking, it has satisfied the minimum requirements, right?
Exactly.
Yeah, so theoretically speaking, it might not make it lower. I mean, I've started feeling that it might not make it lower, but it's okay. I'm not out of position. I still have half of my initial position, so, that's okay. I mean, I don't want to be greedy.
Why don't you explain to our listeners here why trading partials takes off so much pressure psychologically for you?
Because there is not, for several reasons. First of all, there is not a single level that makes you right or wrong, right? So you get yourself the ability, to start scaling in some levels that you know that have been important in the market recently. Of course, you can't have the conviction that the market is going to hit all of them. So many times you find yourself, not in a full position. But on the other hand, you never got full exposure in a level that might not have proved be enough for the market, and then sweating for being, out of the money on a full position, and the market is, running against you, right? Of course, those are general guidelines. I even break my guidelines, several times. I've done it. But sometimes I'm going to do it because, for example, I will choose to follow a gut feeling, or to follow, what my intuition tells me. Usually, to hedge psychologically for that, what I'm going to do is that I'm going to allocate some recent gain, as not booked in my mind, to in essence make the exposure I'm letting myself have on a trade that has a decent chance of running against me, like the trade I have short in the S&P. You know what I mean?
Yeah. How about the fact that you took half off for a nice profit, and even though you don't have a full position on, it's still win-win because you're there. If you're still there, not as heavily, but you're still there if it continues to the upside. And if it pulls back, that's okay too, because that gives you an opportunity, and you're recommitting with actually profits from the half that you took. And, that makes it kind of like a lot less pressure packed, because you don't care what the market does. If you don't care, okay, if it keeps going, I'm there. If it pulls back, it's giving me more evidence that I can add back the half I took off.
The most important thing is that when you don't have a psychological pressure, you tend to make better decisions.
And you know what else, Steve? It's better for your health.
Oh, absolutely.
Okay,
that's one of the reasons.
Yeah,
that's one of the reasons I rejected. That's one of the reasons I rejected quite early in my trading life the short-term trading as a path for me. You know what I mean? Because I was waking up in the middle of the night to check, what did the BOJ do? Or, what did the Bank of Australia do? I mean, I have a position in the Aussie yen, and I didn't care to wake up to check what's happening with the Aussie yen. You know what I mean? I now have a trading style that I don't care. I mean, I'm going to wake up in the morning, check my position, and whatever has happened has happened. Because
so you did what Jack Schwager talks about, and during the interview that he did here with us, the author of Market Wizards, and I asked him what's the most important advice you could give to a trader, and he said find a trading style that suits your personality. And it took you time, but you found it.
I agree 100%. That's A to Z.
And there's a guy who's interviewed all the legends. And that's what he said.
It's more or less as they tell you, like, find something you want to do that you like doing, and then it's not like you're working every day. But if you take it a step further, even in what you do, let's say you want to be a trader, you are a trader, fine. But isn't it also important to find the trading style that makes you feel good about the line of business you decided to do? There is, and that's your trading style. So, it's
sorry I interrupted you.
No problem.
I wanted to interview you because I respect you, and I didn't remember the interview I did with you on FX Street.
That's absolutely okay. It was summertime, and
Oh yeah, I must hit my head with a surfboard right before the interview. All right. So, anyway, Steve. So thanks very much. It's great mentoring, and
absolutely.
This is not all about just giving signals. We want people to learn from what we've already gone through, so they don't have to go through some of the things that didn't work out for us, and edifying and educating and building them up, and you want to have longevity in this. So I've been doing this. 76 I was licensed as a Series 3 guy. So what are we talking about? 43 years? Oh, 4 + 3 = 7. That's completion. So you want to have longevity, and to have a style like that. I that's what I do. I'm a big believer in partials, and it does take the pressure off, especially if you take half and just for money management purposes, you move your stop to BE. Okay, so you book something you have a riskless trade on, and you want to do this for 40 years and not have any health problems, find a way to decompress while you're doing it.
Absolutely. Absolutely. And, there is another adage that, you can't teach experience. And it's, at a big extent, it's correct. You can't teach experience. But
you
when
can
you
learn
have
from
people,
the experienced.
yes, when you have people that have experience telling you something, there is a good chance that you will need to make that mistake a lot less times than you would otherwise, right? Because, for example, you might have to do a mistake 5 times to persuade yourself that, this is definitely a mistake, I shouldn't do it again.
Yeah.
But if you have people that have experience telling you that this is a mistake, you shouldn't do it, and you do it once and you realize it's a mistake, combining that with the fact that you've already heard multiple times that it's a mistake, you might say to yourself, yeah, they were telling me it's a mistake. I did it once. Indeed, it looks like it's a mistake. I'm not going to repeat it.
Yeah,
so
a friend of mine said to me,
save
Steve,
yourself, from doing it like 5 times.
Yeah, a friend of mine. So it took, it took me more than 5 times for a lot of things. And a friend of mine said, Dale, how many times do you have to get hit in the head with a ball-peen hammer to know it hurts?
Depends on the personality of the people, actually, because I've noticed that's one of the things that differentiate people.
Yes. Yeah. So
how much they learn from their mistakes.
So I had a personality disorder. So anyway, you still have about 10 minutes. Steve Hammer is in the house. He's going to be talking about high frequency traders. So everyone from investing.com. Yeah. Steve, everyone sees HFT as an enemy of discretionary trading. So we'll have Steve on. He has to fire up all his servers, so the interview will go till 6:25. But still have some time, Steve, to show what's on your radar.
We had a question about Euro Yen. I have to say that nothing has changed here. As you see, Euro Yen is at the 61.8 of the last leg lower, and I'm also monitoring this ascending channel. So far, the price action lower doesn't really, look like the beginning of like a big reversal. But as long as this area, this 127.5, a little bit higher as well, area is holding, I would be, very cautious. I wouldn't be long Euro Yen here. So if I had to do something with Euro Yen here, it would definitely be that I would be short, right? But having said that, my conviction is not that high that I would actually, do anything with it. So that's because we had a friend asking for Euro Yen. So now we covered that. We also have a friend, we had questions yesterday as well, and they didn't cover that, asking about Euro INR, USD INR, Yen INR. Okay, we can have all of them, Nifty, but okay, let's have a fast look at, first of all, starting from the indices. I have to say that there is really no update since yesterday. I mean, we've had, after this potential reversal day that we had on Friday in the S&P, we've had zero movement yesterday and so far pre-market today. So, we have to wait and see what's going to happen from here. But I need to remind you that we were looking at this formation in the VIX. We had one spike higher, but we did close below it once again. But I would be, if we do see a breakout from here, I would be quite cautious because I think that it has the ability to extend. And given the fact that, in the vast majority of indices, we're banging ourselves in some nice resistance areas, I would be quite careful being long risk here. So nothing has changed in respect to that. Now, we have the friend asking for the Nifty, so let's have a brief look at it. Nifty consolidating here. I was looking at this as an ascending wedge. It can still be some type of formation like this, but we need to see. We're about to retest the 61.8 at 11,100. I think that's quite a critical level. So I would really want to see what's going to happen from here before I say more. But in general, what remains to be the case is that this rebound higher doesn't look impulsive in nature. So I'm inclined to believe that there will be more downside, at least one more leg lower. And the same as you see the situation with Bank Nifty is roughly the same here. I mean, the price action is very, very similar to the Nifty, now having to do with INR, since he mentioned it, and we can then have a look at some more of the exotics. USD INR, I was looking at this formation because, you know, if we break above it, I mean, we can redraw it a little bit like this, right? There it is. So, you know, it's a triangle as far as I'm concerned. So there are two levels that you need to watch for the next move. One of them is a break above this descending trend line, because I think that when and if that happens, there's going to be a continuation to the upside. Keep in mind that the USD INR has been in a sustained uptrend. But alternatively, we would need a break below 68.80, let's say, in which case I would be looking for a deeper correction. Okay, so I think that between 68.80 and let's say 71, there is not really something to do. The fact, as you see here, that the 50 and the 200 DMA have now converged is also a testament that volatility has really dropped significantly. So instead of trying to trade, you know, while this FX pair is coiling, I would advise you wait for a breakout of either of these levels to then take a position. Okay, so that's my view for USD INR, and you also asked for Euro INR. I'm not expecting that to be much different, I have to say. Here it is. Yeah, well, this also has the potential of producing some kind of head and shoulders formation. It looks better for the INR, definitely. You can see it here, but it needs more time. It can definitely prove to be some kind of a head and shoulders formation. Watch this trend line as the neckline, okay? So, you know, if you want to be long the INR, Euro looks better at the moment, much better to be long INR, because, you know, there is a decent formation here that can play out. So, let's see, you asked about something else. INR against yen. That, I'm pretty sure I haven't checked it at all, but...
Be back in a minute, Steve.
Yeah, Dale. Triangle, very likely. In between, nothing much to do. Okay. So you have, like against the US dollar, you have, you know, two trend lines to monitor here. I think in between, not much to do. Okay. Blake coming to New York City, not certain yet if that's going to be the case, because he has you know, some bureaucratic stuff with his house to take care of contract. Billion here and billion there. Pretty soon it adds up. Absolutely. Great new deal. Yeah, those were comments for before. Just to screw with Steven Grega, we will have a time change this weekend. That's true, Ziggy. What do you think that will happen with Bitcoin? You mean in the long run? In the long run, I'm not really very optimistic about the existing cryptocurrencies. I don't think that the technology is going to go away, but I seriously doubt that the vast majority of the existing cryptocurrencies are going to survive through time. But in the short term, I think that they look like they can appreciate further after this sell-off. So, you know, it depends on what kind of time horizon you're looking.
Just another symbol to Steve Volge. Right, man? I mean, really, I mean, it's a chart pattern with a symbol on it, and, you know, you're not putting it in your wallet. You're trading.
No, absolutely not. Absolutely.
Do you have a wallet, a crypto wallet?
No.
Made of leather?
But I now have two different methods of trading cryptocurrencies. One of them is that my broker actually has already brought us CFDs.
Yeah.
The main ones, Bitcoin, Ethereum, and I think Litecoin. Yeah. And the second one is that I don't know if you know Revolut. It's like a you know, online bank in the UK. I have Revolut, so they give you the ability to actually you know,
own them in your account.
Part of your wallet, let's call it, of your account to cryptocurrencies on the fly from the application. So
Wow.
if I really wanted to have exposure in cryptocurrencies like I recently did in Ethereum, I now have two methods of doing so without creating any account, anywhere else and giving my
Okay. One with
information.
leverage, the bank is not leveraged, right?
No, the bank is not leveraged. Absolutely.
Okay.
No.
Do you know if
No.
they take people from America? Because most FX brokers don't anymore.
Oh, they do. They do. Of course, it's a financial institution. You can register remotely. It's very
Okay.
easy, actually.
Maybe you could send me the link on that, bro.
Absolutely. Just go to your smartphone and type Revolut, and you
Okay.
can download the application. You can do everything through the app.
I do have a
And
smartphone now.
Plus,
I'm
it has. I suggest that very strongly to anybody. I'm not working for them, so I'm advertising them for free. Actually,
Yeah.
they have the other advantage that they don't charge you spreads for doing transaction in other currencies at all.
Wow.
I mean, yeah. I told they actually charge you the spot rate. So it's great, and you can change currencies on the fly without getting any extra charges or whatever. So it's very nice.
So you can hold currency, any currency, and crypto, and how about metals?
No.
Okay. All right. That's plenty. Good coverage.
Yeah.
All right, buddy. Thank you, man.
Plus, you can create as many cards as you want, virtual cards. So, for safety reasons, you want to, let's say, buy something from somewhere that, you don't feel safe about. You can create a virtual card that's one use only. So, after you use it, it goes away. And all that happens within seconds. Yeah, so they've really done some amazing job. I mean, I've already brought all my friends to follow in. Plus, you can transfer money to people seamlessly. No waiting of funds to transfer over. Like 3 days or whatever. It's like instant. USD-ZAR. We have one last question about USD-ZAR, and I'm not going to have time to cover more. And this is very fast, actually. USD-ZAR attempting to break higher here. Watch closely for 14.45. I do think that there is a good chance that this is going to produce more upside. I mean, from a technical perspective, it looks good. And we cover the rest tomorrow. We have questions again about crude metals, but if you watch yesterday's recording, not much has changed since yesterday. That's why I didn't go over them again, because there's nothing from a technical perspective that has changed since yesterday. I mean, the major levels that we were monitoring in metals and crude, they're still holding. So we need to be a little bit more patient. Thank you, Dale. Enjoy the interview.
Thank you, Steve. Stephen Hammer, welcome to FACE. I'm now making you the presenter, Mr. HFT. It's been a while. Hello, Steve.
Yeah, can you hear me okay?
Yeah, loud and clear. How long has it been?
I can't remember. I'm so old.
You have Alzheimer's disease too, so okay.
Alzheimer's, yeah.
All right, so two dinosaurs here today talking about what a lot of people, Steve, they demonize, and I don't know why, since you make it possible for people to take advantage of it. But before we get going on this, can we just start off, since it's been a while, with your winding road towards HFT and what led you to high frequency trading?
Well, I started in the market back in 1977, about 40 years ago now, and I guess it was right before the flash crash. In 2007, when Reg NMS was put into place, most people have a completely opposite view of HFTs as we do. HFT, high frequency trading, is essentially market making. And prior to Reg NMS going into place, if you wanted to buy or sell a share of stock, you'd have to call up your broker, and he'd put in an order, and he'd give you some kind of a fill. But there was no national best bidder offer. I mean, there was, but there wasn't an enforced. There's 16 plus exchanges. Back then there were actually more, and there were dozens and dozens of wholesale market makers, and if you called up your broker and put in an order for IBM, let's say you were I was a money manager at the time, and you know, if it was 50 by a half, they'd say, well, I can fill you, you know, 10,000 at a half, and the rest of it I'm going to have to work higher. Tell me what the highest price you want, you'll pay for it is, and then they'd go to work for you. Well, Reg NMS changed all that, and through the use of routing orders to the high bid or low offer, such that you would always get the best fill at the highest bid or the lowest offer that was offered at the time. And that took a number of years before the exchanges and the fabric of the technology got to the point where it could provide that. And it does do that better than it ever has today. And much of the critics of HFT market making, as opposed
are the market makers that used to capture a half a point on the spread.
Well,
now
now
didn't have to be right about the markets. They just made a living off our paper.
Well, market makers are not in the business of running portfolios or positions. They used to, but no longer. And you know, I see SPY, for example, priced out to 5 decimal points.
Wow.
And if even at 4, you know, that's 1/10,000th of a penny. And if they can make 1/10,000th of a penny, they'll run the trade. It may only be for 100 shares or 50 shares, but they'll run the trade. So, you know, they make 10,000 trades and they've earned a penny. Well, in the past, no one would ever run a trade for a penny profit, or much less than a nickel. So my view in watching, you know, we have software that watches how these trades go through, and the typical trade on SPY in a single second has over 1,000 quote changes in that second, and up to several thousand trades in that single second. Well, the amount of liquidity that has been brought into the market now compared to the previous levels for the typical market participant, and I underscore the typical market participant, certainly any of our users of our software, you know, if they want to buy or sell SPY or any commonly traded stock, all they have to do is push a button and they're filled almost instantly. And compared to the way we used to be filled, the fills today are amazingly good. You can buy or sell a few thousand shares of Google, you know, to push of a button, which is a fairly high dollar amount. And back in the day, you know, if you called up a market maker or a wholesaler, you know, your chances, it's going to take you a couple of minutes at least, maybe 20 minutes, maybe even an hour to run that trade. And the spread between the prices that you would get would be very large compared to what people get today. People are spoiled. You know, they think they can get any amount of liquidity at any price at any time. It never has been that way, but it's gotten closer to that.
Yeah, Steve, let me ask you, was part of that regulation that you quoted at the beginning of the interview when we moved from fractions to decimalization?
Well, that occurred, decimalization occurred long before Reg NMS.
Oh, okay.
That occurred back in the 90s. And,
all right.
And so when people say HFT, in my mind, it's market makers. And where there would used to be dozens of firms and thousands of people employed in that industry, there's now a handful of companies with big computers doing it. And the notion that they are manipulating price is just so untrue in my mind. What manipulates price are people and their own where they put their stops and where they put their limits. And
spoofing?
No, that's something totally different. There's very little of that going on compared to the way it used to be.
All
Spoofing is just, I mean, it happens, but you're talking pennies. It's affecting price by pennies.
Right.
And it just doesn't present, in my mind, any real harm to anyone. I mean, you know, if you're buying a share of SPY and you get 2 or 3 cent different change, I mean, if you looked at 1 second tick bars for SPY, for example, you're going to see a 2 to 4 cent spread between the high and the low per second. And most people, when they look at their quote screens, you know, in Thinkorswim or TradeStation or any of these other common platforms, they're not going to see any price change during that second of time, and they're not going to see the thousands of quote changes that have occurred in that single second of time, and they're certainly not going to see the hundreds of trades that occur in that single second of time. They're lucky if they see 10% of what goes on.
Okay, Steve, so, you know, I'm curious why, you know, it's mainly in the media, but when markets are going up and, you know, everyone's doing okay, they never talk about it, but every time there's a decline in the market, they go, oh, it was the machines. The machines. It's because we don't have market makers, human beings down there to make a market, and the machines are all doing the same thing at the same time.
Hey,
what's your response to that?
Well, they're using it as a scapegoat, obviously, and their ignorance is resulting in those opinions.
I do remember that Steve doesn't pull punches, guys.
Back in the day, when the markets were very active on the downside or on the upside, you couldn't get your broker on the phone. And the amount of price change that would occur on big days is nothing. I mean, today is nothing compared to the way it used to be. Okay. People would just not get their broker on the phone, or you'd be sitting on hold for 5 minutes. And then they'd tell you, well, it's a fast market, give me the range you want. And most people on a fast market day or a day where there was exogenous events affecting price, they simply walked away from the market because they knew they're not going to be able to do anything. And the day of the stock crash in 1987, for example.
Yeah, remember.
I mean, once we were down over 100 points, I remember that day I put in I went in that market to buy some put options. And I did that, I guess it was around 2 hours after the open. And then about an hour before and I never got a fill. And then about an hour before the close, I put in a market order to sell them. It took 2 weeks for me to get my fill. 2 weeks.
Wow.
I went out and bought a Porsche.
I don't even remember anything that dramatic.
And that was because I was working for a wirehouse firm at the time, and you know, they had a direct wire to the floor. If you worked for a retail or had a retail account, you just couldn't get your broker. We turned away clients all day long when they called us up. We'd like to do something. I said, hey, you know, you need to wait for it till tomorrow. You're not gonna know what you're gonna get. You're gonna put in a market order. You're gonna get whatever it is. You won't know what the price is, and you're not gonna know what the price is for a few days. Why would you do that? So, you know, most of my clients on that day, they did nothing, or if they did something, they put in market orders to buy something. So, you know, these computer programs are. I think the market is more at least for the style of trading that I teach to our users using our software. The market is more reliable for trading ranges, which is what we do, than ever before. I don't know if my screen is being shown here.
Yeah, but, it is. It was, Steve.
Okay, so here, this is what I teach our people. Most people fail at trading for 3 reasons. Number one is they have nebulous goals. They get into a trade and they don't know what their real goal is. They say, well, we'll see how much money I can make. They don't have, number two is they don't have a repeatable and measurable method of analysis and decision making. And number three, they really have very poor execution strategies or no execution strategies at all. And so what we do with our SPY 75 program is we will teach people how to use our software because it's so different, and our entire process is so different. I was listening to your presenters before and looking at their charts with their lines and things in all directions. Well, our stuff is a lot simpler than that. We have very defined setups that we look for, and what I've learned after 9 years of teaching people how to use our software is how to teach them to use it. So We teach them to trade intraday ranges using only two rules. Price follows the slope of the delineator, and we trade when cycle momentum is high and avoid when it is low. And cycle momentum is a function of the delineator. It's not a function of price. And we look for essentially these 5 very specific setups. And we started this in 2016. Prior to that, we used to use our 5-minute models, but there weren't enough trades over the course of a week. So I created.
How many do you get now?
We'll get 4 or 5 setups, these pure setups, and we have these aggressive setups where if one of the conditions isn't present. So for example, for 2016, we made 50, and our goal is to make 75 SPY points in a year. The market's never gone up 75 SPY points in a year. And we can achieve that over a 50-week year by simply targeting 1.5 SPY points per week. So in 2016, we made 55. 2017, we made 57. 2018, last year, we made 81. We actually made over 100, but we stopped as soon as we got to 75. We're already at 47 for the year. And here are all of our trades. Last week, we exited our swing trade for 30 points.
Nice.
And what I teach people are these divergent range setups. Here we have a. So we use the delineator to tell us what direction to trade, and we use the accumulators to identify divergent ranges. So when we see price rising and the accumulator falling, that creates a divergent range. And we have these methodologies that tell us how to determine what the tradable low and tradable highs are. But the basis of these accumulator trades is that price will trade back out the range when the divergence was present. And we only trade those in the direction that the delineator tells us to trade. We don't trade long and short in the same day. We only trade in one direction at a time. And we don't care what happens tomorrow because we're only focused on today for these intraday range trades. So last week, for example, we had on the 25th, we had a divergent range short, which was aggressive, that made its target. We had another one that we avoided. We had another one that same day, which we took. The next day we had no setup, so we did nothing. Here's we had a divergent long trade, which made its trade, and here's another one of these divergent trades. We exited our secondary, which is our main trend delineator. The delineator is a derivation of the McClellan oscillator that I've been using for a long time, but quite differently than how McClellan uses it, quite differently indeed.
You tweaked it.
We just take it from a different perspective. You know, everybody, it's, you know, the market is many things to many people. I can show the same chart to 10 people. 10 people could have 10 different interpretations, and they can all make money. And just as one of your prior presenters stated very correctly, that what works for you and what is comfortable for you is what is important.
Right. That's what Jack Schwager said.
Well, it's true. And
you'll get interviewed by him.
And you know, we have over 100 people in our chat rooms. We have 7 or 8 different chat rooms, each with different topics. And some people, like, for example, for me, I hate going short growth stocks. So if I see a short setup on a growth company, I just will wait for it to drop and look to go long rather than look to go short. And we've got a lot of people that are exactly the opposite. They hate long setups. You know, I love being early to a long, and I hate being early to a short. So I'd rather build a position into a low, because the market is rigged in your favor when you trade growth stocks. And I tell this to people all the time, and sometimes it sticks, sometimes it doesn't. But if you invest in a growth company that's growing, let's just say 15% a year, and you hold price constant and you let time go forward, then that stock now becomes undervalued because its sales have risen, its earnings have risen, and the market understands that that stock is now undervalued. Everything else being equal. So that stock will go up in price over time to reflect the fact that their sales have increased and their earnings are increased. And this is why it's a lot better to trade growth stocks from the long side than from the short side.
How much time did it take you to come up with your delineator, and in its current form? And what was the investment on your part? I know that, you know, we have to wrap this in a few minutes because you have to start up your servers. What type of investment? Say someone wanted to do it themselves, Steve, and, you know, I'm sure it's not an easy thing to do. How long was the process to get to where you are now, and what's the cost of, you know, running HFT and developing your own software to share it with people?
Well, I had been using the McClellan oscillator for many, many years prior to 1997, and the myself and a friend, Jeff Donovan, who has been working, he and I have been working together since we met in 1988 when he was running a bulletin board. And hold on a second, I just had my main computer crash on me. I don't believe in back testing because curve fitting, you can't curve fit the past and expect to be able to predict the future. But what we did in 1997 was we took 5 basic mechanical trading systems at the time, a number of them, and we took 2 years worth of SPY data and we ran it. And if you, on average, these mechanical trading systems were about 2% profitable, and you had to take every single trade with exactly the same position size to make that 2%. So then we took those exact same results, and we only took the results that were confirmed, the trades that were confirmed by the direction of the delineator at the time of those trades, and the gains went from 2% to 80%. And so the conclusion was, and it's obvious if you think about it, that what matters is direction. And if you're trading in the correct direction, you've got a better chance of making money than if you're trading in the opposite, in the wrong direction. So what determines right from wrong? Well, the slope of the delineator. And that was 1997. I've been using it consistently since 1997. I've never had a down. I've never had a down year.
Okay.
Last year, for example, we made 88 SPY points.
Mm-hmm.
We made 40 points alone in the month of December. With the delineator turned down in September of 2018, and the accumulators were showing aggressive selling into the highs in September and early October, and for over a month.
Yeah, takes time to turn a battleship around.
Well, you know, if you get a short signal, you want the market to go up first so that you can sell it. If you get a long signal, you want the market to go down first so that you can buy it cheaper. And
so okay, go ahead, Steve. I'm sorry.
That's what we teach our people to do. And, you know, we don't use moving averages. We don't use channels. We don't use anything that was on any of those charts of your prior presenters.
Many ways to skin a cat, my friend.
Exactly.
So what is the best way besides your Twitter handle? What would be the best way for people to get a hold of you and talk to you and maybe correspond with you, Steve?
Well, send us an email. We changed last year. We used to just, you know, sign up anybody who wanted to use the software, and I found that it's so different, and the skills that you need to use it, which we teach our users, are there's only 4 or 5 of these skills. So we found that it was better to put people through training rather than letting people learn by losing. You don't need to lose money to learn a lesson. And so we have a 3-week trading course that we put people through. And the first 2 weeks it's only our fundamentals. You know, we don't, Head and Shoulders is a shampoo. It's not a geometric pattern that we look for. We look for different kinds of patterns, but not geometric ones.
No market dandruff for your students?
No.
Okay, that's good to know. So Steve, yeah, very interesting. conversation today. Just I want to wrap it with one question. I know you have to go, but one of our participants in our webinar, any view on dark pools, and do they come into consideration for you?
Well, we watch here's the SPY accumulator, for example. Can you see, is this being shown? Okay,
it is.
all right.
You're moving it around.
Here's the SPY accumulator, and it's right now set to the liquidity. There's three kinds of transactional accumulators. And so we watch the liquidity, and we can break out the algo trades, or we can break out the dark pool, and together they're here. So if we compare the overall liquidity accumulator to algo only and dark pool, we can see that yesterday, basically most of the volume was run by machines. And by machines, we're talking about transactions that are entered using a computer.
Right.
And most high-frequency trades from high-frequency trading systems, not market-making systems, but trading systems, they'll trade SPY for 3 to 5 pennies per trade. Well, and most of those trades last less than a second because, as I said earlier, if you looked at a 1-second tick bar for SPY, you're going to see a 2 to 4 cent spread between the high and the low on every single second. And the trade resolution, the time resolution of these retail trading system platforms like Thinkorswim and et cetera, they just can't show you that resolution. So if you had a high frequency trading system that traded for 3 pennies and did it in less than a second, well, if you traded 100 times in a day for 3 cents net, that's $3. Well, if you traded for $3 a day, could make $3 a day on SPY and go home flat, you're not going to care about what SPY does in the next 5 minutes, the next 5 days, or the next 5 weeks.
One last question, Steve. Conspiracy people I have in here. Is there a plunge protection team?
No, actually, they bowl. Yeah, they operate out of the Edison Bowl, which used to be the largest bowling alley in the world. They had over 100 lanes. I think that, I can't remember, it was some incredible number of bowling lanes, and it was in Edison, New Jersey, and they're too busy bowling to worry about buying stocks. But as you know, the Federal Reserve is prohibited from buying equities, and
not like the BOJ.
Well, if you think about it, if the U.S. government went out and bought share at 5% of Google, wouldn't that be a nationalization?
Yeah, I guess that's what they did with the banks after the financial crisis, right? But we didn't call it nationalization.
Well, they changed a law and they did something for a very short-term period of time. The TARP program was extremely successful. The government made billions and billions and billions of dollars.
Yeah.
And that was all a good thing. But, you know, in terms of these conspiracy theorists,
you
know, I see these tweets all the time, but think about it. Why would an institution risk tens of millions or hundreds of millions of dollars to try to manipulate the mind of some retail trader that's trading, you know, $10,000 worth of stock? It's
good point. Yeah, I know. Okay. All right, so I think you don't. I think the PPT is, you know, on strike because they're making them at the bowling alley. So, Steve, what a great interview once again. You never disappoint. I love your candor and demeanor, and everyone. I recommend Steve's a must follow at HFT Alert. And I wish you a great 2019, my Trading Warrior brother. It was great talking to you today.
Take care, Dale, and thank you very much.
You're welcome. Okay, everyone, that's a wrap. Remember, don't just count your pips, count your blessings, whether you're making pips with HFT or squiggly lines. Good hunting the rest of the day. You're very welcome. And see everyone tomorrow. Adios.